and welcome to Book 101 Review. Book 101 is all about the books that I read for the last 40 years, and today I have my special guest. He is a debut author and the author of the book Golden Playbook, or the Investor's Golden Playbook, no other than Mr. Frank Buchholz. Welcome to Book 101, Mr. Frank, and can you please introduce more about yourself?
Sure. Thank you. First of all, Daniel, thank you for having me on. I appreciate it so much. I worked as a financial advisor for 40 years, and I came to realize that a lot of people don't have a clue when it comes to investing their money. And with the advent of the 401k, which is a retirement account offered by a lot of corporations these days, it turned the ordinary person into an investor overnight. And many of these people are putting their funds into money market accounts, which does not grow very fast, and it's not a terribly prudent idea for 401k investors, etc. So bottom line is I wrote a book on investing as a way of giving back to my fellow citizens because I felt that I had something to say. If I could grow my IRA to over $8.5 million, I felt that they had a good shot at growing their retirement accounts to a pretty substantial sum as well by using my simple, proven formulas that I used so well over my many years. Thus, I wrote the book, Investor's Golden Playbook, and as a double give back, I'm also going to contribute all of the profits I make on the book to charities.
Well, thank you so much for sharing your knowledge and wisdom to
Yeah, thank you, Daniel. Good crowd here. Good crowd here. Keep this crowd around.
the world. And Mr. Frank, what makes your investing philosophy golden compared to other approaches?
Well, I think one thing that is very helpful is the fact that I simplified things. When you've explained things for the 50 millionth time when you're working with clients over 40 years each and every day, you get pretty good at explaining things. And my clients always complimented me on my ability to take a complex subject and boil it down and distill it in such a way that they can understand it very easily. So one of the, of course, my attributes to my book, of course, is that it's investing, taking a complicated subject and making it easy to understand and easy to implement. And of course, I also include some real life client experiences with the book. And I think that makes it for a little more interesting read. And I have some good stories in there about clients. And I think that that is a way to also instill knowledge because it relates to people in a proven manner, if you will.
Proven money for sure, proven techniques that will money will come to me, as they saying. Who is this playbook for beginners, seasoned investors, or both?
I think both people can use it because I had a number of my clients who were very affluent and very knowledgeable, and I had them read the book, and every one of them, without question, told me they learned something about the investment world and investing in general. Having said that, for the person that's already investing and doing it on their own, is probably not so applicable. But it's really more, I think, applicable for a lot of people, for younger people in particular, that really don't have a clue and really don't have an interest in investing. And candidly, after your family and your health, your money is pretty darn important. And if you can grow your money to a nice big nest egg when you retire, believe me, you retire a lot better off than if you're poor and living on Social Security.
What's the most common investing myth your book debunks, Mr. Frank?
I think the bottom line, of course, is that so many people are afraid of the stock market. And the irony, of course, is that if you look at the stock market based on the Standard & Poor's 500 index, it is up 3 of every 4 years, and the average return through thick and thin has been 10% per year. So bottom line, of course, is that people have to understand that yes, there's some fluctuation in market value there, but if you approach it with a long-term horizon and you stick with it through and through and continue to contribute to the market, you will generally, if history repeats itself at all, generally do really, really well.
Let's talk about the core strategies of the book. What is your number one non-negotiable rule for long-term investing success?
Start early. Start investing early. You know, if in one of my chapters, I talk about the Starbucks strategy. And rather than buying 2 cups of Starbucks every day, if you could take that $10 and even just buy the ticker symbol SPY, which mirrors the Standard& Poor's Index 500. And if you start with $5,000 and do that over 10 years, excuse me, over 35 years, you'd have over $1 million when you're done investing. And now we're talking about just $10 a day. So, you know, if you start early, the money grows and compounds for you over through thick and thin. And I think that's a core that I want to really drive home to people. Start developing a strategy now and start investing now.
Start investing now, people. And how do you
Yes.
balance risk management with the aggressive growth strategies?
Well, bottom line, of course, you need to have 2 piles of money. You need a pile of money for long-term investing, which you don't touch, and you also need a pile of money for daily living expenses, emergencies, a new car, or what have you. So bottom line is you need to have 2 piles of money, and that way you kind of balance things out. To put all your money in the stock market or put all your money into a money market account, that's not gonna work so well because you're gonna kind of go crazy when the stock market has some ups and downs, if you will. But if you can kind of balance things out, that gives you a comfort level and also provides you with the ability to navigate through thick and thin.
Through thick and thin, through thick and thin indeed. And can you share a golden rule from the book that counter initiative but highly effective?
I think bottom line is, the one rule I have for clients: no guts, no glory. Meaning that you have to take a little risk. Uh, you know, there's risk in life, and when you take a new job, you take risk. No matter what you do, you take risks in life. And what you want to do is be able to take some risk with your money and stand back and let things work and let things grow, if you will. Um, but you got to have courage to step in and take some risk and start now.
Start now for sure. And let's talk about the market psychology, Mr. Frank. How does your playbook help investors avoid emotional decision making?
Well, again, I think it comes down to the fact that I illustrate graphically that my 401k when I was working went down substantially through the quote unquote the recession of 2008 and 9, and those were very challenging times to put it mildly. It was very worrisome. The company I worked for, Bank of America, at that time went from $50 a share to $3 a share, and it was, shall we say, challenging to put it mildly. However, number one, I did not sell anything through that time frame, and number two, I did continue to contribute. So even though times were, shall we say, hellacious, scary, worrisome, sleepless nights, and on, I managed to stick with it and kept investing. And those funds that I invested at that point in time grew immeasurably over time.
Definitely. And Mr. Frank, what's your advice for staying disciplined during the market crashes or bubbles?
Well, I think what you can do is you can look back in history. And if you go back in history and look at the returns in the marketplace, every time the market's gone down, every time it's come back and it's moved to higher highs. So, as an example, in 2020, by March of 2020, things were pretty dire, to put it mildly, because of COVID. And of course, at the end of the year, the markets wound up being up. And again, this year we had some challenges too with the quote unquote with the tariff situation. And the market sold off substantially, but it came back stronger and came back to higher highs. So, bottom line, of course, is that you have to understand that history has a way of repeating itself. And it's not a guarantee, but generally speaking, it does repeat itself. And generally speaking, you will do quite well by investing in the stock market and following my rules of my investor's golden playbook.
How can investors identify when to holds versus pivot on a underperforming asset?
Well, that's a good question. What I generally do, of course, is that in my case, in my IRA, for example, when I rolled it over from my 401k into my IRA, I have a what they refer to as a managed account. And a managed account is basically where you turn the reins over to a professional money manager who does this each and every day, 40 hours plus a week, managing money in the stock market. And I have it broken down to where I'm 70% in what they refer to as value oriented stocks and 30% into growth oriented stocks. So bottom line is that I'm not really pivoting per se. It's in effect it's not an autopilot because I'm not. If you look at it, I'm kind of letting somebody else do it, do with it all the nonsense, if you will, and that's been proven very profitable for yours truly. Um, I don't think that the average person can put together a portfolio of say 50 different stocks and get returns in a positive manner that way. But if you have the professionals do it, who, like I say, are doing it for a living, the odds go up substantially of you getting positive returns and very positive returns at that.
Positive returns. I like that. Asset allocation. What's your stance on diversification? Is there such a thing as too diversified?
Well, that's a good question. I think bottom line, of course, is that you can diversify between stocks and bonds, and then of course you also have maybe your own real estate, your home, et cetera, et cetera. What it comes down to though is a comfort level. Can you live with having, you know, say 50% of your assets in the stock market? Can you live with 75% of the stock market? Can you live with 25% of the stock market? It comes down to comfort level number one because that is your risk tolerance. And risk tolerance is going to determine what percentage of your funds go into buying your home, putting funds in, say, the bond market and putting funds in the stock market. So you want to split things up. And then, generally speaking, what I recommend is as you get older, to kind of skew things back from the stock market to a degree and move some money into the bond market as a way to ballast your account so that you can kind of not eliminate the risk, but also to kind of minimize the fluctuation. You're not going to eliminate it, but you will kind of slow it down somewhat. And I think it's a good proven way to kind of keep your eye on the ball, if you will. So that I think is a very positive way to look at asset allocation. Change it over time to become a little more conservative as you get older.
Which asset class do you believe is the most undervalued right now and why?
That's a good question. I think probably given where we are in this point in time, maybe the value-oriented stocks, companies like 3M and Bank of America, et cetera, probably are somewhat, undervalued to a degree. Um, the growth world, of course, which includes your technology stocks, NVIDIA and Microsoft and Apple and all those are pretty inflated at the moment. Having said that, who's to say they can't go higher? But they are definitely pretty much inflated. In terms of the bond world, that may be an interesting play because there is an awful lot of talk about the potentiality of the Federal Reserve cutting interest rates next month in September. So, if as the Federal Reserve cuts interest rates, that generally is a positive for the bond market because as interest rates fall, it tends to push the value of your existing bonds up. So it's an inverse relationship. As one goes up, the other goes down. So if interest rates go down, the value goes up, and vice versa. So, I would tend to think that your value-oriented stocks and or your bond market probably would be the undervalued at this point in time. And of course, your technology and growth stocks probably would be on the overvalued side of the coin.
Mr. Frank, how should investors adjust their playbook for inflationary versus recessionary environments?
Yeah, so the stock market, of course, has been a great hedge against inflation. To give you an example, if you look at companies like 3M, for example, which is fairly well known household name, they have had a history of consistently raising their dividends. And basically, it's kind of like a piece of real estate where the if you own a piece of real estate, you rent it out, and you raise your rent every month, or excuse me, every year. That's of course an inflation hedge as well. But the beauty, of course, of the 3M, of course, is you don't have the all the maintenance to go with it. So then, of course, also what you also get is you also get appreciation in the value of the stock. So, that to me is a great inflation hedge. You get higher income, and over time, generally, the if you buy the right dividend paying stocks, your dividend amount will typically double about every 7 to 10 years, which is a great inflation hedge. Plus, you get appreciation in the value of the stock as well, typically.
Mr. Frank, as an author, a debut author, what are your short-term and long-term goals?
Well, my short term goals would be to sell 10 million books, and donate $80 million to various charities. I think that would be quite a nice feat, if you will. Um, Longer term goals, of course, I have three other ideas for other books. One fiction, a science fiction book, and I have a book on spirituality and a book on creativity. But candidly, it is quite a journey from coming up with the idea to actually getting a book in print that's available for sale. It's shall we say a bit challenging to put it mildly, but it's very rewarding. And I certainly enjoyed writing the Investor's Golden Playbook for sure.
Definitely. And Mr. Frank, good luck to your goals and looking forward for more books like this to come.
Well, thank you. I appreciate it, Dan. I appreciate having me on. Thank you so much. It's been a pleasure.
No worries at all. And what would be your advice for those people out there who want to be an author like you?
You got to be kind of cognizant of the fact that it's a bit daunting because you have to get the book together and you have to find a publisher. Even though my book is self-published, um, just be prepared. It's a little bit of a long haul, if you will. It took me 3 years to get this done. Now I was not working on it hard every day, but it did take me 3 years to get it actually finished and complete in my hands. Um, but just be prepared. It's not the easiest thing to do, but you got to stick with it. And if you're really, I was bound and determined. I think you need to approach it with that strategy as well to make sure you do finally get to your ultimate goal. And that, of course, is a book in your hand that you can actually offer to people. And my book, of course, is a book that helps people. And I think that's a great way to approach writing a book, if you will.
Thank you for that advice, Mr. Frank. And can you please recommend a book or books that influence your journey?
Well, I think bottom line, of course, in the investment world, of course, Warren Buffett, of course, he's quite the guru from Omaha, and he is certainly probably one of the, if not the richest human in the world who made his money by investing money. So he's definitely a hero, and he's definitely a person I look up to, and his knowledge is, shall we say, par excellence.
Par excellence. Yes. Thank you for that recommended book, Mr. Frank. And what's one piece of recommendation you'd give someone starting the investing journey today?
I think the bottom line. I mean, not to patronize myself here, but I think if a person reads the book cover to cover, I think they would learn an awful lot. And then, of course, start reading the Wall Street Journal. Go on Morningstar.com, go on NerdWallet.com. Those are two websites that have been very helpful. I found over the years when I'm looking for information. Even Yahoo Finance has been good, but there are a number of websites you can look at. And of course, guess what? The websites are free as long as you have a computer. My book, of course, is a very nominal investment for what you can get out of it. So I think that's a good way to start, no question.
What's the best way to track progress beyond just portfolio value?
I think bottom line, of course, is that you know, the old, can you sleep at night? Um, Sleeping at night, of course, is I think pretty pretty darn important. And if you're investing money and you're losing sleep at night, that's not a good situation. You've got to be comfortable, and I think that's a good way to look at it. You look at your numbers, how what your returns are, and then of course you have to ask yourself, am I comfortable by doing this?
Comfortable and you like it, people. If you have the passion of what you're doing, please do so now, right now. Mistakes and lessons. What's the worst investing mistakes you have made, and how did you shape your playbook?
Well, I think that the worst mistake I made probably was maybe I should have been a little more aggressive when I was younger and tried to save a little bit more. But the bottom line is that I did make it into the 1% in terms of the net worth and so on and so forth, which I'm pretty proud of. But if I had, tried to save or invest a little bit more when I was younger, I probably would have been better off. But candidly, it's academic because my wife and I are, we have, we're very well off financially. So I'm not sure it's really a mistake, but bottom line, of course, is that you can look back and you can always look at things you may have could have made some improvements. That would probably be an improvement, but at this point in time, it wouldn't really change our life one iota.
Mr. Frank, before we wrap up our discussion for today, I'm inviting you to please do listen to my other podcast, people.
Oh, absolutely.
My other podcast, because my abstract essay is already in fifth season, abstract poetry in second season, and my book 101 review in fifth season too, comedy 101
Wow.
in second season, and food 101 in fifth season as well, geography 101 in fourth season, and my baby podcast law 101 and mental health 101, love letters
Wow.
in its
Interesting.
fourth season, and movie 101 review and music 101 in fourth season, and science 101 and sex 101 in its first season. Please listen to them or wherever you listen your podcast. So, Mr. Frank, where should the readers go after mastering the golden playbook? What's next level?
Well, I think I would be remiss if I didn't mention the fact they need to find a good financial advisor to work with, because the financial advisor can be worth their weight in gold, because they can act as a psychologist and also recommend some good portfolio managers, et cetera, and some good ideas, and sit down with a client and sit kind of see where they want to go with things. So it's something that I recommend strongly. And if they want to do things more on their own, they can certainly go to a company like Charles Schwab or Merrill Lynch One or you know Merit Prize or whomever all the discounters are. But I'm not necessarily fond of that per se because I don't think most people have the wherewithal to be able to buy stocks on their own. I think they need to go to a good financial advisor. And I have a chapter in there about finding advisors because it's some advisors are kind of in it for themselves, to put it mildly. So you want to kind of sift through the advisors and talk to them and get a feeling for what he or she's talking about. And again, ask yourself, is this who I want to really work with?
Mr. Frank Buchholz, thank you so much for sharing
Thank
your
you, Daniel.
knowledge and wisdom to the world. So, can you please invite our listeners to support your debut book, The
I sure will.
Investor's Golden Playbook?
I sure will, Daniel. Thank you.
So, where do people buy your book now, Mr. Frank?
Amazon.com, Barnes and Noble. You can also get it on the Apple, some part in Apple, but primarily Amazon and BarnesandNoble.com.
Yes, people, let's support Mr. Frank Buchholz, because if you support him, for sure, more and more and more empowering advocacy to come, more and more empowering books like this to come. So, Mr. Frank, thank you so much for
Thank
your
you,
time.
Daniel. Appreciate it. Thank you so much. I appreciate it. Thank you.
More to come, people. See you soon.